Good morning, everybody. Welcome to our morning volatility report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to, I believe, the first day of spring. If it's not the first day, it's really close to the first day. Here is our last master class of all 10. Anyway, the class will be uploaded and available for sale, the whole series, after tomorrow for all of you who could not attend it live. Um, it went well. I think it was a good series. Everybody that's in it has liked it so far. Also, I think, did a good job of looking for trades as well. So it ended up being a low volatility series. So if you want to try to figure out how to trade volatility and when the VIX is 11, we had 10 weeks of it. So overall, I think it went very well. We covered all the vol products. We also covered VIX and realized volatility, help you price, and the VIX futures, how to price those products. Oh, and I forgot. My disclaimer, which is, the contents of our morning video is for educational purposes only. Anything we say should be considered education. Options have risks, so consult your financial advisor. All option trades are your responsibility alone, not ours. We just teach you how the options work. All right. So that will be available in our store very soon. And with that, I would guess it's a unique series. And speaking of low volatility, let us get to. Notice there was no markup today for VIX because we had that little bit of a run into volatility ran up just a little bit into the close on Friday, right? Everything was marking down for the weekend kind of nicely. We were in the 10 handle, and then, there is some testimony today. There's more government, let's just say Washington, D.C. circus shenanigans, which is enough to kind of lock things up. And again, we have another day with very low realized vol. We have the North Koreans launching other missiles. That could make the FXI trade a little bit. We'll take a look at that in our chat room today. Doing nothing for the price of oil. Oil is down fractionally. And as you can see, so anyway, besides the markup that we had, it hasn't recovered, but it's still, we could drift down again. If we're in the 10 handle by the end of the day, it would not surprise me. We are still not picking up any of the volatility quite yet from, if you want to see two interesting pictures, right, let's look at, this is, the Fez is sort of the ETF for the big 50 euro zone stocks. If you look at the volatility here, the 30-day volatility is not much because it's expiring before the French election. There's a French election. Okay, we're looking at, I think, since Brexit highs. Yep. And remember, we didn't really get that lift off until afterward when everybody got surprised. This was about the level we were before the election, so we haven't even hit that level yet. The Dutch elections went. The right picked up a few more seats, but not enough to sort of upset the apple cart, it looks like. But still, you look at volatility in Europe, and then you look at volatility in the S&P 500, and there are two different stories. I would say maybe a week before the election, start looking at volatility. The way VIX is priced, we're looking 30 days forward, so we're starting to get into the April cycle, but it's been picking up. It's been picking up that volatility slowly but surely, but there's just still not a giant bid for it. If you go out in the term structure, April 21, the volatility out here is still in the 8 handle. You're picking up a little jump post. Right now, they're pricing a 3/4 point move. My guess is if you want to buy any juice, you buy that series because I don't see it going down prior to the election. Um, However, at time spread opportunities, there isn't much really in the short term. It's all very, very inexpensive. I mean, the 8 handle, I haven't seen really that for so many. We've had that a couple times this year, but I mean, since I traded the SPX like 20 years ago. So very, very low at the money volatility for a consistent period of time. How long will it stay this way? It lasted years until from in the mid 90s. So volatility could stay very relatively low, and 13, 14 VIX could be near term highs. As volatile as every trading cycle has its own basic volatility highs and lows. We've had the financial crisis, we had the euro breakup, two shocking kind of like macro issues that push volatility very high when nobody knew what the color of an orange was anymore. And now, for whatever reason, there is just a lot less volatility to equities. So when does that go away? Probably when something changes that we don't expect. Oil has been a little bit at a little bit of volatility lately, so we'll look at that. We'll look at XOP because that's still kind of a good mover. It seems to be an outside mover in the group, and the volatility is still relatively low. Strength for stocks. Google hit an all-time high on Friday, I think, and Apple is not far behind. Something Mark and I like. It literally is the cheapest volatility around. It's just how to buy it and pay for it that we're trying to figure out. But we're starting to see volatility now, short term, in the 13s here. So opportunity to buy calls. If we do get a little bit of momentum, I think Apple, it's been participating as well as anything else. It seems like the 13s are about where things are stopping, so there's not a lot of vol risk anymore. It doesn't take much. And it is, you look at the VIX at 11, you look at Apple volatility at 13, and it's not too far different, although Apple's beginning to act more like an index anyway lately. So if you're looking for change, if you're looking for the market to change, one of the things in the vol class I said is volatility kind of acts how it's going to act until there's a reason to change, either for equities or the broad market. Right now, there's not much different in the news, and there's also on the kind of the macro level, interest rates are sort of, it looks like they're peeled out for a year. So there's a lot of the stuff that used to cause a lot of movement. It just is not around. The next big catalyst is earnings, and the first quarter cycle went pretty good, all told. So we're going to be looking for, we'll look at some earnings plays. It's almost time now to start to look at like pre-earnings vol buys. I'm trying to grab a little bit of lift into volatility into the earnings cycle. I think the vol's very cheap, so we'll look at some of our usual suspects like that. One thing I will note is Apple, prior to the last cycle, the just off cycle term was 16 volatility. After you could buy 16 volatility in April, expiring after the earnings, and right now May and June is 19, 18. So they're already the opportunity to buy, I guess, really cheap longer term juice in Apple. Not quite what it was in January, but nonetheless, it could be we can keep an eye on it. It's still not super expensive. And it might be a place to dabble a little bit. All right, and with that, I will see many of you in our chat room, and the rest of you look for our next master class coming out. Will be on premium selling and hedging short premium positions. That will be coming out April. It'll be like April, May, June. All right, everybody, have a good day, and I'll talk to you later.